In this video, I'm going to give away one of my 9 trading strategies for absolutely free. This strategy is based on ICT concepts, but it has a little twist, okay? You don't need to know the daily bias. You just want to follow the rules strictly, and trust me, you are going to become profitable, okay? So let's get on straight into the video, okay? So the very first rule is you want to identify a ABC pattern liquidity sweep. Now, what is an ABC pattern? Okay, I teach this in my mentorship, but we are not going to talk about it here. I'm going to teach you the ABC pattern right here in this video. So what is an ABC pattern? So let me show you. This is the A leg, then we got the B leg, and then we got the C leg. Okay, it's very simple. So the C leg, we have A, B, C, right? So the C leg is a liquidity sweep. Okay, it sweeps out the high, okay, as you can see. So this is like an A, B, C pattern. Okay, the A leg is a trend in one direction, and then the B leg is a small trend in the opposite direction. Okay, and now by a small trend I mean a few candles. Okay, I do not mean like a huge trend. It's just the way I say it. And the C leg is the movement in the very first direction. Okay, so I think I should use the word direction. So the A leg is a move in one direction, the B leg is the move in the opposite direction, and the C leg is once again move in the first direction. So we got A, B, C, and the C leg takes out the liquidity. So this is called ABC pattern. Now this is the sort of pattern that you should be looking for. Okay, once you have identified this pattern, okay, on a 15-minute time frame during a London or a New York session, okay, London or New York session. If you don't know how to spot if you can't find what session is going on, you can go to the indicators, okay, and I use this indicator and type in FXN Asian range, okay, and then when you want to put this on, it's gonna just show you what settings, at what time the session, a specific session starts. So what is the rule number 2? The candle that sweeps the liquidity should be the lowest or highest out of the range. Now you need to understand this very, very carefully. Okay, so see, we have the A leg, we got the B leg, and then we got the C leg. So this, when price goes above it, the very first candle that sweeps the liquidity, okay, and then closes, I do not want to see another candle go above it. Okay, so let's suppose we have this candle, this one candle, it goes up and then it closes. Okay, once the candle has closed, I do not want to see another candle wick above that candle, okay, or just close above that candle. I want to see price go down into this range. Okay, I do not want to see another candle go above that candle, if that makes sense. I'm going to try to explain this thing once again. Okay, so you need to understand this carefully. The C leg, okay, the very first candle that goes out of this range, and by range I mean the liquidity sweep. Okay, when price sweeps the liquidity, okay, the very first candle should close, okay, or it can just wick and then come down and close here. Okay, so the candle can wick, and then it closes here. Now I do not want to see another candle go above that wick. Okay, I want to see price go down. And when, let's say, candle closes out of this range, I do not want to see another candle go above that. I want to see price directly go back into the range. Okay, so I hope it's clear. If it's not clear, let me know in the comment section. I'm going to try to explain it. Okay, it's very simple, and when I'm going to show you the example, you're going to understand it. Okay, so what is the third rule? The third rule is wait for change of character on a smaller time frame within the range. Okay, so once the candle closes, okay, let's say the candle closed here, right? You want to drop down to the 1 minute time frame, and on the 1 minute time frame you're gonna see a structure like this. So let me okay, so on the 1 minute time frame you're gonna see a structure something like this. Okay, So you want to wait for a change of character. Okay. Now there could be a bullish, a bearish candle right here. So, yeah, bearish candle right here. Oops, my bad. Right around here. Oh my God, what the freak? Now this could be considered change of character as well. Okay, you do not want to look for lows or highs. It could just be one candle. Okay, that is considered structure. So you want to look for a market structure shift. Okay, so let's suppose this is the a low or a structure, and price breaks this structure. Once price breaks this structure, okay, and one more thing. This is not a valid structure. Okay, why? Because it came back after taking out the liquidity. Okay, and then it made another high. For me, this is not the structure. I want to see a break of this structure that was created before liquidity sweep. Okay, so I'm going to type it here. The structure that was created before, oh my God, liquidity sweep. Okay, so you want to look for that. Okay, this is not considered the prime structure. Why? Because it touched this line. Okay, even if it touches this line, okay, this our range line, and then comes back and creates another high, and then it breaks, it's not a valid structure because a price touched and then wrecked it off this level. So for me, this is not a structure within the range. I want to see a structure get broken within the range before price sweeps the liquidity. Okay, so this is when, let's say price breaks this structure right around here. Now this is a valid market structure shift for me. Because why? Because this structure was created before the liquidity sweep, and I'm going to explain it to you more properly when I show you the examples. Now, what is the next rule? You have a change of character on a smaller time frame, and then you want to have your entry at extreme fair value gap or auto block. Okay, so let's say your fair value gap is the extreme fair value gap. Okay, so you do not want to use the first fair value gap or the second. You want to use the extreme, the highest one. Okay, yeah, you're gonna miss, sometimes you're gonna miss the trades, but it's the best way. Okay, so let's say there's this fair value gap right around here. You just want to set up your sell limit order. Okay, and then you want to wait for price to go down up to here, and boom, this is your entry. And now where you want to take your take profit is the low of the B leg. So let me just, oh man, this is so, yeah. So we have the A leg, B leg, and C leg. The low of the B leg is your take profit level. Okay, you want to take your profits at this level. Now, risk management is totally up to you. I'm not going to teach you risk management, but this is where I take my profits. And now you do not want to hold your trade without, going break even. You should go break even when some structure is broken after you are in the trade. Okay, just to be on the safe side. And then you can maybe take partials. It really depends, up to you. So yeah, this is very simple, guys. It might sound a little complicated to you. I don't know. I hope I explain it well, but I'm going to explain to you in a very good way now. Okay, so what do we have is we got the A leg, then we got the B leg, and then we got the C leg. Okay. Now you might ask me, why do you not consider this A, B, C? Well, I can, okay? But as you can see, if the price keeps going higher, right, then my A leg becomes this, my B leg becomes this, and my C leg becomes this, okay? So once you have identified an ABC pattern, okay, so we got the A, B. So when we have A and B, you want to draw out this line, okay, your range, okay? And then you want to wait for price to either wick above the the high of the A wave, which is this, okay, which is this, or close above that range and then come back. So as you can see, price on the 15-minute time frame, price wicked above this level and then closed around here. Did it close right around here? Yep, it did. So let me go back once again. So as you can see, price closed and then there's no other candle that goes above this high, okay, or goes above the whole candle. This is very important, guys. Now once you have your candle closed, you want to drop down to the 1-minute time frame, okay, and now you're gonna see something like this, right? So now we got the A wave, we got the B wave, and then we got the C wave, okay. So now you can see we have this structure right here. Now here's my question to you. Do you consider this as a market structure shift when price broke through to this level? The answer is no. Why? Because you can see price touched the line and then created the structure as I explained before. But look at here. Look at this structure right around here. It was created before price went up to sweep the liquidity. Okay? So guys, please, you gotta understand this, okay? This is why, you know, I just found out these things by backtesting like for months, okay? And this is what works for me. And once you have a clear market structure shift, when the structure is broken within the range, then you want to look for fair value gap, extreme fair value gap, okay? So right around here, we have market structure shift or change of character, whatever you want to say it, okay? Now look at here. What do we have? We got fair value gap. Okay, so this is our fair value gap. So we take our entry, and this is the candle. We put our stop loss right above this fair value gap candle, the very first candle. And you might ask, where do we take our profit? Okay, so let me go to the, so let's see if we get our entry first, right? So, okay, we are now in the trade, okay? So let me go to the 15-minute time frame. Oops. And now you can see we can take our take profit at around this level, okay? Why? Because this is the A, B, and then C. This is our take profit level, as I explained before. So let's go to the 1-minute time frame. You can see we got our entry, right? And if I play this through, you're gonna see that we hit our take profit. No, not yet. There you go. So our take profit was hit. This was a 1 to almost 8 risk to reward trade, guys. This is absolutely insane. So I'm gonna give you guys one more example, and then I want you guys to back test it. And yeah, you need to back test it, okay? And rewatch this video again and again, and then you're going to understand this completely. So let's move on to the example number 2. So here's another example. So we have the A leg, then we got the B leg, and then we have the C leg going on. Okay, so once you have the A leg and the B leg, you want to draw out the line, as I explained before, the high, which is this, okay? And then you want to wait for candle to close above it, above this line, or wick above this level, and then close below. It doesn't matter, okay? So as you can see, price wicked above this level and then closed around here. Once that happens, you want to go down to the 1-minute time frame, okay? And then we have this structure right around here, okay? So you can see, as you can see that it is within the range, and it was this structure was created before the liquidity sweep, okay? So once the liquidity is swept, now we want to wait for market structure shift. And one more thing to note, okay, wicks do not count. I want to see a body close it below this level. So let's see. Okay, so we have a body close around here. Now we want to identify an extreme level fair value gap. So as you can see, there's this some fair value gap around here. So we're gonna mark out this fair value gap around here. You can see this, there's this fair value gap, right? So I'm gonna take my entry from this level, the fair value gap, and then I want to put my stop loss right above this first fair value gap candle. And then where do we want to take our take profit? At around here, 3.65. You can make it 3.50, but I want to put it right around here, which is my the low of the B leg. Okay. I noticed I didn't give you an example for a long position. Well, it's literally the same, concept. Yeah. So please just don't worry about it. Okay. It works with shorts and longs. Yeah. So we have set up our sell limit order, and then we have our take profit level. So let's see. Do we get our entry? So now we are in the trade. Okay, one more thing to note is if price goes below your take profit level without entry. So let's suppose you did not get your entry, right? And then price goes and takes out this level, which is your take profit level, then the whole setup becomes invalid. Okay, so make sure you be careful of that. So we are in the trade now, and as you can see, the power of this move. Okay, so there's something clearly happening here. Okay, so you can see price goes down. Wow, it almost hit the take profit level, but let's see. There you go. Now you could have stopped at break even here, so or you could have took some partials, or you could have trailed your stop loss here, and then you could have moved your stop loss here, and then this would have been a decent trade. Okay, so as you can see, it works really well, guys, and this is one of my 9 trading strategies. If you want to learn my other trading strategies, you can go down into the link in the description. Okay, I have 9 different trading strategies, and all of them are profitable. So yeah, guys, I hope you like this video, and please go and back test this and then forward test this strategy, and I kid you not, it works like a charm. So yeah, guys, goodbye, and make sure you like this video and subscribe to my channel as well. Goodbye.